So this is the euro dollar analysis for Tuesday, 31st of October. Now, let's have a look what happened on the 30th of October. So, today on the 30th of October, we saw the last week we did see quite a bit of selling on the euro due to the dovishness of the ECB and the subsequent Mario Draghi press conference, indicating that that they are going to extend QE into September 2018. That was seen as being bearish for the euro. So we saw this big move to the downside. Now, usually on a Monday after we have a large move on either based on data released on a Thursday or Friday, where you do see a bit of a recovery or prices trade in a range on the Monday before we have continuation for the rest of the week. So so far we have seen a bit of a recovery on the euro against the dollar. We have recovered back to this level here in around the 16.12. Had a few. Let's just clear this chart up a bit. Had a few tests of the 16.12 there, and we did seem to find support. We do appear to be forming a bull flag. We're respecting the 20-period moving average so far. Now, the level we're looking at is in around the 17.10. In around the 17.10. On the last analysis, I did put a Fibonacci from there to there, and the 50% retracements in around this 117. It's 117. 06 actually, 117.06. So we do have the 50% retracement in around this 117.06. So we'll just use the 117.10 level. So we could potentially see prices move from here. Where we would expect to see them go from here would be possibly a retracement. If we do continue to have this retracement, we could respect the 20-period moving average all the way up into this key level for this 117.10 that has acted as support before. Coupled with the 50% retracement on the Fibonacci. If you're a Fibonacci trader, we could see prices come back down to test this 16.12 and then go continuation further beyond that. Further beyond the 16.12, we are expecting price to get down to this 115 level, and beyond that as well. Especially in light of the strong fundamental catalyst being the dovishness of the ECB and Mario Draghi, we would expect us to get down to 115, 114, and possibly 113 eventually over the coming weeks and months. But 115 is the next target we're expecting. Although we are trading above 116.12 at the moment, I do believe this is a relief, a bit of a relief rally. For a short-term recovery before we go up to this significant level in around this 117.10. Before we see a further sell-off down to 116.12, we might consolidate before breaking down towards this 115 level. That's our medium-term target for now, this 115. But we have to see how prices develop, whether we do see some stronger volume coming to the market. I don't anticipate prices getting all the way back up to this in around this 118.10, where we did see the selling momentum come into the market, indicated by this black triangle here. On the data release, the interest rate decisions by the ECB and the subsequent press conference. So, unless there is a strong fundamental change in regards to the US dollar, we do expect some US dollar news out later this week. I think it's just a release of a statement by the FOMC. Everybody's expecting a rate rise in December. Nobody expects a rate rise in the next coming couple of meetings or so. So I think the interest rate differential should see the euro weaken against the dollar. So let's just have a look at the higher time frames to see where we are. And so we're going to go out to the weekly, and let's just get on here correct. So on this weekly time frame, again on this weekly time frame, higher time frames will take a while to turn around, but on this weekly time frame, you could say that we're still in an uptrend. We have a series of higher lows. We had a gap up off the Macron elections in France. We've had a strong move to the upside. We've broke above the 200-period moving average here on this weekly chart. We found resistance in around this 120.92. We have come down and found support at the 200-period moving average. Had a brief relief, a bit of a rally. We did expect to see prices trade back up to the 120 level, but we actually stalled on this weekly time frame. We had one candle that closed bullish, but since then we've had some bearishness coming to the market. This large bearish candle here with the black triangle above it was the candle from last week. which resulted with a strong bearish candle, which resulted from the subsequent Mario Draghi ECB press conference. So we're going to use that as our reference point. Even though at present this week is in bullish territory, we do expect further retracement all the way down, possibly to that in and around these levels just down here, possibly the 113, before we might see a larger recovery in prices. But for now, we are still bearish, even though this week we're still in bullish territory. So if we go down to the daily time frame, let's just go down to the daily before we wrap this analysis up. So if we go down to this daily time frame again, what we can see here is we've had like a little bit of a pullback here, and we've tested the 120 level 3 occasions here. We weren't able to break and hold above this 120.30. I think only one occasion we were able to hold above this 120, but subsequently on these daily time frames we've not been able to hold the 120 region, and we have seen selling momentum come back into the market. This recovery here was short-lived, and it didn't even get up to this 1910, which is a significant level, and further along as well. Coupled with that, we did see a bit of a double top weakness here, and this is the press conference and the interest rate decision on this large bearish candle. We've come down to this area of support in 116.12. So as we would expect, we did see a bit of a recovery. So we could see a recovery all the way up to this 117.70 here on this daily chart, but we do expect further downside down to the 115s and possibly down to the 113s. But 113s a medium to long term target, and we will take some time to get down there. So that should wrap up the euro dollar analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.